Okay, can you guys hear us in the back? All right, Deepak, we're getting into private credit. That is just about the biggest panel I have seen outside of a government event in India. So, and I think Rajat gave them extra time. By the way, private credit leaders, next year we expect you guys to be the sponsors. See those names? The lead sponsors, that needs to be all of you because clearly business is going very well. And by the way, they took away 5 minutes from us. Did you notice? Not only are they running 20 minutes late, they took away 5 minutes. So we have a grand total of 14 minutes and 13 seconds. All right. So let me introduce Deepak. Deepak is a senior managing director and India head for OTPP. How many of you know who OTPP? How many of you know? Okay, right, about a third of the room. So we're going to have you introduce. He leads all of OTPP's investing and portfolio management in India. And prior to his joined OTPP in 2020, and prior to that was at BCG. I was at a rival consulting firm before you were born, Deepak, so, but I won't hold that against you. That's okay. Was at BCG where he led a lot of the private equity work for a very long period of time. So, Deepak, it's great to have you. So what we're going to do is, since we have now 13 minutes and 32 seconds, we're going to actually do a few things. I'm going to have Deepak talk a little bit about OTPP. What do you guys do? How can everybody in this room benefit from you? I think they're all trying to raise money from you. I don't know if they're doing private credit or not. And then we're going to get into 2 short questions. That's all we're going to do.
Look, let me start off by letting you guys know that we are an LP in the traditional sense, but we are actually a very large GP, right? So if you take $250 billion that we have, of which 80% is managed in-house, and only 20% goes to managers, right?
But 20% of 250 billion is 50
still a large number.
50 billion. How many of you are raising capital? Anybody raising capital? Only Karthik. Nobody else is raising capital. Oh, raise your hand. 50 billion is a lot of money, Deepak. 50 billion. Okay, keep going.
Look, if you're in India right now, you're trying to raise capital, it's not such a hard place to be, right? Compared
it's easy for you to say, no?
That's also true. So look, we manage money for 330,000 teachers of Ontario. Try to give them retirement security. The reason we have gone more and more into private assets is because, aging population, the ratio of teachers, blah, blah, all of that stuff drives to the fact that we have to do better on our investment returns. India is one of the 6 markets in which we have our office. So it's clearly a very important market. It's one of the 9 strategic countries as we define it. So we want to do more and more in India over a period of time. We opened our office in 2022. We are invested across infrastructure, private equity, credit, late stage growth, as well as public equity. So across the board, we have our direct teams through which we are trying to do more and more directs. We also have our partners across each of these asset classes with which we are working, so that gives a lift to our private teams.
Awesome. All right, cool. So what we're going to do is, really only focus on 2 things. Deepak is going to talk about what he's excited about in India. Clearly, we can't talk about private credit. We just had 40 minutes of that. So outside of private credit, what are you excited about? And then I'm going to talk a little bit about what are we excited about at Peak 15. And then we're going to talk about what worries us, right? And that's all we're going to do. So Deepak, start with what excites you guys.
Look, lots of exciting stuff, right? So when we started investing in China, there were only specific asset classes we went after. India, given all the things that folks have talked about, demography, digital revolution, so on and so forth, as well as rule of law, we are here investors in everything. Infrastructure, which is an asset class where we primarily just buy and hold for 20 to 30 years. We are doing that in India.
By the way, when you buy a road for 20 to 30 years, like how much returns do you make?
So that's typically we are underwriting at 13%, 12 to 13%, which
30%
is
or
1.3, yes.
Okay. Karthik, you were going to write a new files, man. The roads file. Anyways, keep going.
This is INR denominated, so obviously, 3%
Okay, good, in rupees.
Yeah. So it's probably 10% US dollar, which is probably better than any of the other markets that we are seeing, right? So in infrastructure, roads and renewables are the 2 areas that we are excited about. The markets are deep, investors have made money, and your counterparty, at least in the road side, is the union government, right? On the renewable side, given just the excitement across the board, I think we have also started to take development risk. On the private equity side, it's the themes of financial inclusion, right? IT services, which is the true export of India, pharma, which is another exporting market for India, as well as on the healthcare services side. So we own Sahyadri 100%. We continue to look at these themes. The other new theme that we are getting excited about in private equity is related to advanced manufacturing industrials. We'll watch that theme over a period of time and continue to look at that. We'll get into what worries us soon. And then the third thing is related to late stage growth. So we launched our strategy, we did our first late stage growth deal called Express Bs.
Express Bs,
yes.
Okay, we'll talk about that.
And we are excited about B2B, we are excited about fintech, we are excited
B2B
about
e-commerce?
B2B e-commerce, yes.
Wow, there's like no margins in that. Like,
So
no,
B2B,
but like what kind of B2B e-commerce are you excited about? You know, like last time I checked, I mean, you know, really,
Yeah.
like what kind
So
of
look,
B2B?
Express Bs, right? Express B is a
Okay, logistics.
derivative play to e-commerce. So if you think e-commerce is something that would continue to expand, then you want to go after logistics, right? Which would expand over a period of time. The other way to play this would be through logistic parks. So there are multiple ways to play this, right? You don't have to actually pick up a name. You can do derivative play to many of these things. And finally, it's the broader...
Is there like a minimum gross margin that you look for in a B2B like company?
In this specific case, right, so in the margin...
Logistics is like 20+%,
Yeah,
right? Like,
exactly.
So that's decent.
Yeah.
But would you invest like in a B2B company that has, I don't know, high single digits gross margins?
No, it's very hard.
Okay, there you go. So most startups, I don't think there's, fortunately there are no startups here, mostly fund managers.
Yeah.
Okay, got it. Keep going.
So that's it. I mean, those are the themes that we are looking at in the short order. And then the ability to actually play in multiple asset classes allows us to dial up or dial down over a period of time on where we want to do investments first.
So what, I mean, you pretty much described the entire Indian economy.
Yeah.
I'm just trying to think whether you actually excluded anything. What do you guys not like? I mean, like, are there sectors that you are like, from a direct investing standpoint, we're like, for now,
Yeah,
because, you know, like, oh, you did not mention Web3 and crypto. That's good.
So look, broader India consumption story, the only pieces that we like is high margin businesses, right? Just beauty is one example, which is a higher margin business. Businesses where you don't have positive unit economics, we're not going to go after, right? So that's one piece for us to look at. Within each of these areas, there are subsectors that we like, right? I'm not going to go after the entire financial services economy.
So within financial services, what do you not like?
What we like, I'll give you what we like because
Yeah,
not
okay.
like would be, right? So what we like is housing finance, MSME lending, as well as auto finance. Those are the three themes that we like. Everything else is excluded so far. This is also driven by where our teams have actually done the deep dive and where we think we have the right to win.
Got it. Okay, cool. I'll ask one last question and then maybe I'll talk a little bit about what we're excited about. You know, there are a lot of, you're doing a lot of direct investments. That's what I think most of your team does. But if you were to invest in local Indian fund managers, Deepak, what would you look for?
Look, we are already investors into many of the managers on the private equity side, right? So
On the private equity side, okay.
So as well as we are investors in
Yeah, I know. Thank you for that.
But look, at the end of the day, I think we're not going to do any more new private equity fund managers, right? Because we're investors in Dara, we're investors in Chris, we are investors in some of the Pan-Asian funds as well as global funds. And we are already coming across many of these folks looking at the same set of opportunities that we look at, right? Private equity, we look for opportunities 150 million plus in terms of co-control, and control transaction 300 million plus. There are probably 14 such transactions that happens in all of India.
14 per year?
14, yes.
Okay.
In all of India. It doesn't make sense for us to get into new, to drive, opportunity for us for our direct team. On the late stage growth side, because we are later stage, we like investing into earlier stage funds. So I think SaaS would be one of the areas in which we would like to have a manager so that if they are going Series A, Series B plus, we can go at a later stage.
All right, good. There you go. SaaS, A, B type investors, funds would be very interesting. I think, look, from a peak 15 standpoint, much like you all, but we are excited about everything that is tech and tech enabled. If we look at our investments last year, we were quite active, especially in the early stage business. About a third of our investments are consumer broadly defined. So consumer brands, vertical commerce, travel, gaming. So that's sort of about a third. About 25 to 30% is AI and software, but really software now is really developer tools, right? So that's about 25, 28%. Last year was the first year where deep tech became quite meaningful for us. We made our first 2 semiconductor investments. We have a green hydrogen electrolyzer company, advanced manufacturing with IP. That becomes very, very interesting, and a bunch of companies like that. And then early stage, we've always been very active with fintech. Probably have 25 fintech unicorns as a franchise in India. So I think those are the things that we're quite excited about. I think the new thing for us, Deepak, at least last year, was deep tech. What we are seeing is the emergence of IP-based companies, right, that are founded by, actually, I co-lead a seed business at the firm, and we run a program called Surge. And in this current cohort, we have 13 companies. 8 of them are founders with PhDs.
Wow.
So it's kind of like crazy, like, in fact, 7 of them are, both co-founders are PhDs. So that's sort of a very big change in our ecosystem, where we are seeing these serious IP-based companies that are starting up now. It'll take a long time before they get to your stage, right, where you guys would directly invest. Okay, so that's sort of what we're excited about, for what it's helpful. Let's now go to what are you worried about?
A lot, actually.
Okay, good. Well, we only have 7 minutes, so
yeah, so a lot, right? Across the board, this is probably a more complicated investing environment than it has ever been, right? So we lived in a benign geopolitical environment. It's getting worse. We lived in an era of hyper-globalization. There's de-globalization that is starting to happen now. Inflation was also very benign, and it's starting to go up. Across the board, you're seeing a lot of challenges. If you come to India, the private equity ecosystem, right? So we spent a lot of time, right? And you were joking that we look at everything under the sun. We did no new investment in private equity last year.
Do any investments last year?
In private equity.
Zero?
Zero.
Oh, wow.
And we looked at, not for the lack of trying, we looked at 6 or 7 opportunities. What's happening is a lot of capital is moving into India, and a lot of managers, right? We are in performance business. We are not AUM gathering business. So if you are such, and you can.
By the way, nobody ever says they're in the AUM gathering business.
But we don't even raise capital, right? So it's.
Okay. I know. That's what I mean. You can say that, but like, I just wanted to set the record clear for the Indian industry, at large.
So it's in the performance business, right? So if there is no reason for us to get excited about a specific sector, and every time we had a valuation in mind for investment, there were investors who were willing to pay 2 to 3 times higher than that. And I think you would continue to see across the board the bid-ask spread to be there. And that does put pressure on closed-end funds, which have a fund life, and it requires them to sometimes deploy capital at a higher rate. We personally, across the 3 areas and the subsectors we didn't find any opportunity that we could get excited about, given the valuation.
So too much capital chasing too few companies in private equity, leading to very high prices. So do you think we've had this, in fact, the previous panel, or maybe it was the panel before that, there was a discussion that private equities had a terrific run in India over the possibly last, 7, 8, 10 years. You think that's changing now, Deepak, or?
I think, look, you have to go into the pockets, right? So when I say private equity, for us, it's like really large EV companies, right? 300 million plus. Like, I think in the smaller scale and lower middle market to mid market, you have more opportunity. We don't play into that sector. So you'll see pockets of where things would go. And when I say like we are long-term investor, we think about decades, right? So we just have to get excited about one thing in a year or 2 things in a year and do a large position and move on, right? So and that's where we are going after and doing things. I think it's going to be increasingly hard, especially at a larger EV.
So why don't you invest smaller amounts?
It doesn't make sense,
I guess
right?
You have 50 billion of, right,
250 billion fund, right? Doesn't make sense. Late stage growth, we are excited about. There we write $80 million checks. There.
So what's the late stage growth check size?
So it's 80 million. So call it 50 to 150, we can be flexible. And there we have been excited because we provide an angle, a capital solution which is not available otherwise, which is like you come in one step before the IPO happens, you consolidate the cap table for the founder as well as early stage investors, and you take away the pressure from that stock right at the IPO. That specific solution is where our capital is differentiated. So we are finding opportunity. I mean, a lot of crossover capital is gone, and there has been some exit of capital in late stage growth, and that we are finding quite attractive. Again, as I said, each of these markets are cyclical, right? Private credit we used to like a lot. We never created our own private credit program because right now the yields in US are really high. But once the yields start compressing, then India starts to become more attractive. So that ways we can actually play across different things. But I think, generally speaking, lots of capital is about to come to India, given all the talks that are happening, and that will continue to put pressure. Right? This is one. India has never had dearth. I mean, there are some moments in which we have had dearth of capital. India, the problem is the supply of scaled assets. I think that would continue to be the problem. I don't think capital chasing deals is going to be a problem for a long period of time, at least from our perspective.
So that's anything else that kind of worries you about, just other than the fact that you can't find a company to invest 150 million? By the way, we have lots of them, Deepak. You know, just saying, you know, I mean, like, other than that, anything else that worries you? Are you excited about the macro, the long-term trends, all the consumption patterns?
I mean, look, we have dependency on climate, right? Extreme heat creates issues. Especially for India, especially given our dependency from an agricultural standpoint, as well as employment from an agricultural standpoint. The second piece is related to just inflation and what happens with broader inflation. All the macro things that apply to the broader geography also apply to us, as well as commodities. Our exposure to commodities is really, really high. If something were to go wrong in one of the regions, that starts to create issues, right? And if you think about our geopolitical positioning, and the neighbors that we have, that also is not, we don't have friendly neighbors, right? So there are a lot of things which can create issues from a macro standpoint, but generally speaking, there's a lot of things to be positive about as well.
All right, good. A lot to be excited about. I think from a venture standpoint, if you ask me, like, close our eyes and, wish for something, so my partners tell me that's not a good strategy in the venture capital business, but anyways, it used to be, by the way, exits, but I think now the IPO markets have gotten to a point where actually it's very exciting, right? I think we'd be quite shocked at how many of our collective sort of portfolio companies are going to not just get profitable, but very profitable. If you ask me what's the one thing that I would love to see more of, it's not something I worry about, but something is more technical founders, deeply technical founders, right? Across spaces, I mean, as I said, right, like 8 of our 13 companies have PhDs, but the reality is we don't have enough deeply technical founders starting up, right? That's why, for instance, if you look at AI at the foundation model level, the Bay Area is way ahead, right? I mean, China is sort of number 2. You could argue that, UK with Oxford Cambridge ecosystem is further ahead. So whether it's AI, whether it's quantum, whether it's semiconductors, whether it's, energy transition, I think having more deeply technical founders starting up, and by the way, this is not a problem we can solve as a nation over 5 or 10 years. It's a 20-year game. We got to double down and triple down on our universities, have many more PhDs, have many more research centers established and so on and so forth. But I'd say that's probably the thing that, because, as India today is, we are world class in many areas, right? Fintech, transactional commerce businesses. I think we are probably a few years away from being even in software, developer tools, things like that. But the next big frontier for us is these sort of what I call IP-based industries, where we have to really become quite relevant. All right, with that, let's end with, we have just under a minute left. What's the one big priority? I mean, we're 2 months into 2024. If you were to say OTPP India, one big, huge focus that you have, what is it for you guys?
Look, it's franchise building, right? Going deeper into each of our asset classes across the sectors that we go after. I mean, that's one big priority for us in this stage. Just our right to win, increasing our right to win. It's extremely competitive, but there are opportunities out there, as you were saying, for us to get deeper and creating a right to win. Having an angle in every situation that we go after would be extremely important. That is one big priority for us. How about yourself?
Yeah, I think for us, we just want to find the Google. It is that company. It is that company. By the way, we do have a whole bunch of mini Googles. We just want them to become Google faster. All right, with that, we're going to wrap up. Thank you very much, Deepak. Let's give Deepak a big round of applause.